All right, you guys, let's go live on all platforms and get going here. Because today we're talking about the types of business loans, the types of financing. So, want to make sure we're live on all platforms because by the guys, we're halfway through 2024. All right, it is July. We're going into August. Like, oh my God, right? That's a trip. So, I mean, you're probably wondering which small business financing options are right for you. And this is the right place, okay? I'm Dominique. I'm the CEO and founder of DominoFX Group and the Domino Effect. I'm director of women-owned enterprises at GRA Capital. And we help businesses secure financing. Our partners have already helped businesses secure over 5 billion across the country. So guys, today you want to be here, you want to hit that follow button because I'm breaking down all of the small business financing options that you guys need to know so that you can understand, right? Moving forward, we got what? August, September, October, November, December. We got 5 months left in the year. Oh my God, that's a trip, right? All right, you guys. So you're probably saying, what small business financing option is right for me? And, it really is a pain in the ass, right? I got to be honest, right? Because there's so many different lenders, there's so many different financing options for your business. It can be confusing. That's exactly why I founded DominoFX Group. And I built this lending platform, right? With over 80 lenders on it. And my team and I, we help match we help match founders to funders. We match you to the right lenders and more importantly, to the right lending product. So we take all of the guessing out for you. You can call, you can speak to one of our financing advisors and can advise you, work with you, and explain the lending product for whatever it is that you're looking to accomplish. So what I mean by that is if you own a business and it might be a construction business or a restaurant or a doctor's office or a manufacturing business, even if you own a manufacturing company, right? And there's two manufacturing businesses, right? Your need may be different than the other. One may need working capital, one may need equipment. Those are two different types of products. So the core products out there are SBA loans. SBA loans are typically 10 years without real estate. You can go up to 25 years with real estate as far as the term. 5 million without real estate, 10 million with. From there, outside of an SBA loan and outside of a bank, there's all these different type of products, right? You have term loan options, you have revenue-based options, you have equipment financing, you have asset-based lending, inventory, right, where you can leverage your inventory. And then you also have receivables, right, like factoring lenders where you can factor individual invoices. So all of these different options have a time and a place, guys, okay? Everyone's needs are different, okay? Understand that? Everybody's needs are different. Um, all of these needs are, and it can really be a little bit overwhelming, right? If you're trying to do this on your own. But if you have a business and you have receivables and you have inventory, we can look at either an asset-based loan or some type of receivable type of product, right? Where you can leverage, right? You can leverage those products, okay? Comment leverage if you agree with that, right? Leverage is the word of the day, okay? I love the word leverage. We're always talking about leveraging opportunity. So leverage your receivables, access capital, get a revolving line of credit or an asset-based loan, and your B2B or receivables are actually assets that you can leverage, right? So if you have that, then we can look at inventory. Now, if you're looking to buy equipment, then you absolutely, want to finance the equipment through an equipment lender that's specific to the equipment. Okay. When you finance the equipment specifically, there's only usually a lien against that piece of equipment. So if you're buying a truck or a piece of equipment, it's construction equipment or machinery, something with manufacturing or even furniture, right? In your office, you can finance all that. Furniture in your restaurant, right? Fixtures in your restaurant, right? Or the kitchen in your restaurant. All of these things can be financed. So if you want to do that, you want to use an equipment lender so you don't lock up and put a lien against all your other assets and cash flow in your business. If you're not looking to buy equipment, if you don't have receivables, if you don't have inventory, if you don't want to go the SBA route, then the two options really available to you are a term loan product that's going to look at your cash flow, and it's going to look at the sales and the cash flow of your business, more revenue based, right? So some lenders will focus heavily on cash flow, right? Others focus on profit. um, some care about what industry you're in, and most lenders care about what your use of funds are. Some are okay if you're in like a distressed situation. GRA Capital works really well with companies that are experiencing rapid growth, right? Distress from rapid growth. Um, and others only want to work with opportunity, right? Typical terms are 12 to 36-month terms, and that's usually your next best bet outside of an SBA loan. But again, there's all of these different options that I'm talking about mentioning, but they have all different guidelines, right? There's term loan lenders that only want to do 680 or 700 plus credit score. There's some term lenders that will do 600 or even the 500, right? Some will only work with certain industries. And that really does go with every lender because every lender has their own guidelines, right? Minimum time in business. They're looking for a minimum FICO requirement, a minimum revenue requirement. And then some will only work with certain industries, right? So that's the whole reason why I even created DominoFX Group and this show and this channel, The Domino Effect, is because if you really want to explore these options, right? If you're in business, you've got, we want to know, we're looking at where you're located, your time in business, profitability, all of those things make up which lender is going to approve you or not approve you. And just getting approved is only half the battle, guys. You also have to get the right approval, right? Good debt, bad debt. You have to get approved. Like, let's say you get approved from one lender, but you might be able to get approved for another lender that'll give you 2 or 3 times, the money with much, much better terms. We see that happening all the time, right? We have clients, I could think about a client that I had the other day or the other week, actually. He was one lender approved him for 100,000 and another lender approved him for 250,000. Okay, we're actually working on a larger transaction. One lender came in at 750, another one came in at 2 million. So it's all about getting to the right lender. So get connected with my team, get connected with myself. Very brief phone call, very brief conversation to assess the opportunity, challenge, or need, or whatever is going on in your business. Myself or one of our advisors is going to tell you exactly what you're going to qualify for, what the amount will look like, what the terms will look like, what the rate will look like. And then from there, we work with you to collect all of the financial docs. And it's just a real simple application that lending partners use. We submit it to our in-house due diligence for underwriting. If it's something that needs we move very quickly. If everything is prepared and ready to go, can get funded within 24 to 48 hours. Now, if it's a little bit more of a complex situation, for example, we're currently working with a client that we have to help who has multiple NCAs in place along with an SBA loan. So we need to do some unique restructuring on that so that she's able to access the funding that she needs. So those type of transactions can take longer, right? After the package is submitted, then it's usually 2 weeks after the package is submitted for those clients to actually be funded. So you guys, it's important to know what funding options are available to you, okay? Because as you can see, there's so many different lending options out there. Depending on what you're looking to use money for in your business is really what's going to make up which product is right for you. All right, guys, so that's it for today. Thank you guys for tuning into the Domino Effect. I'm Dominique from DominoFX Group and the Domino Effect. If you found this information helpful, if it resonates with you, then hit that like button, subscribe, follow, and share, guys, because the more we grow, then the more we're able to reach more businesses, put out more helpful content, and be able to help more business access capital. All right, now submit your questions, comments as well, so we can get those addressed. And if you're looking to join a community of founders ready to execute, then go